SME space. The completion of the 10-year demutualization project of the Nigerian Stock Exchange has no doubt opened a new vista, especially growth prospects in the bourse, as more people are likely to dip in investments and project the organization more to the world. Yes, the move, which will usher in the public listing of the exchange's shares, was finalized on the 10th of March following approvals from the Securities and Exchange Commission and the Corporate Affairs Commission. Demutualization is the transformation of a stock exchange into a public company that is share owners based. It allows for the shares of the bourse to be quoted on the floor. The development, experts say, will enthrone a new regime of transparency and against the non-distant era of difficulties and insider dealings that led to the crash in the wake of the global meltdown in 2018. 2008, I beg your pardon. Joining me now live to continue this conversation and to give insight into the impact of this demutualization process on Nigerian Stock Exchange and by extension the country. I have the Chief Executive Officer of Cowrie Assets Management Limited. He's Mr. Justin Chukwu. Mr. Chukwu, good afternoon to you. Thank you very much for your time. It's good to see you.
Thank you, Tolu. Good afternoon, and it's my pleasure.
Yes, I want to start on this note, something that Nigerians would like to hear about. We've seen what's happening with regards to PMS before we move to the demutualization issue. What is happening? The PPRA came up with a press statement and all of a sudden it was deleted online. And now the NNPC is coming back to say, no, the price of PMS will not change, will remain the same. How does this come to you? What's the issue with our deregulation process?
For me, what is happening on the price of PMS is lack of political will to take the difficult decisions. The government has told us time and time again that they have deregulated the price of PMS, of fuel, and that market forces will determine the price of fuel. So at some point when crude prices collapsed, the government reduced the price of fuel, and the government said they will adjust the price of fuel in tandem with the price of crude in the international market. We've seen, I'm sure they did not budget the fact that crude price could go back to 60, 65. Adjustment mechanism will certainly lead to the consumers paying more. And they obviously did not budget the fact that it could get to 200 naira. So all this while, there has been a talk of the government on the price of fuel. The past 2 months or 3 months, there have not been any change in the price of fuel. In fact, interestingly, if you remember, the last change in fuel price was actually fostered by the Minister of Labour, who said that based on negotiation and agreement with Nigerian labor unions, that the government was reducing the price of fuel from, I think, 169 to 165, a drop of 4 naira. So, and the key questions are, was that determined by the market forces? Today, what you saw was that PPPRA, in the normal cost of their job is actually to compute the landing cost of fuel. So they did a computation that showed that the pump price of fuel today should be in the neighborhood of 212 naira, between 209 naira and 212 naira. And the depot price should be in the region of 206 naira. So they published it on their website, and media men picked it up and reported it. So people panicked, believing that automatically meant that the crude price will go, pump price will go up. But that pump price is not, what PPRA does is to provide a guide to NNPC. On NNPC is to take a decision on whether to adjust crude price on pump price or not. That decision has not been taken. What NNPC has said is that they are going to wait until they're meeting with Labour in April, after which they can determine or agree on a new price. Which simply means, as a country, we have not deregulated the price of fuel, and if we do not deregulate, we're not going to get the benefit of a deregulated market, because you're not going to see refineries come up. Nobody's going to invest in refineries if the market forces are not determinant of the pump price. So the challenge you're going to be dealing with is that living with that we will bear the burden of higher pump price without ultimately getting to a point when market forces will force down the price as a result of competition.
to that before we quickly move to our other topic of discussions. Do you think that we can sustain? Already subsidy is not even provided for in the budget. So if this is done and the labor unions are insisting that something must be done, so what's going to give way? What do you think would happen at the end of the day? Because if everybody maintains its different positions, then the masses will definitely suffer.
You see, that's why I said the challenge we have is a leadership challenge. I mean, the government has not taken the bold steps to take the difficult decisions. Let me tell you, Tolu, they say that you can't make an omelette without breaking an egg. We really can't build the structure, the appropriate economic structure in this country without going through some pains. If you have a dislocation, you're not going to put your leg and then something which you just repair or heal. You need to go to an orthopedic who will you have to go through pains. We need to go through these bed pains at this time. We really can, the government has to take a decision and need to convince labor that, look, this is the appropriate thing to do. We are one of the few countries in the world that produce crude and import every liter of refined petroleum product we consume, principally because the government cannot sustain refineries. We've gone through turnaround maintenance for the past 20 years, and the refineries are not working. We have got to giving licenses to marginal people to build refineries nobody has built, apart from Dangote that is currently building an export-oriented refinery. Why is it so? Because the government determines the price of refined petroleum products. So you really cannot be in the stream and the soap will enter your eyes. We need to get these pains now, bear these pains now, and build an economy where we export refined petroleum products. So let me tell you, importation of refined petroleum products accounted for more than 43% of our import in the third quarter of last year. So that would have been trapped locally. We spent close to 2 trillion naira on importation of refined petroleum products in the last quarter of last year. That amount, about 1.9 trillion, could have been trapped within this economy. The trade deficit we had in the third quarter, fourth quarter this year could have been narrowed or possibly eliminated if we had refined our petroleum products. But we're not doing that. We're not ready to take the pain that we require to take now so that that downstream sector will come alive. People will invest in that sector and create the necessary employment. We're not even talking about the entire value chain of lost values we are not trapping. You would have in an industry that will produce feedstock for the pharmaceutical industry, for the resin industry, and several paint industry, and several industries that draw their input material from the refineries. We are not doing that. You're going to create employment across those value chains. We're not doing that. But because we just want to enjoy some level of comfort today. So for me, I'm telling the government that we need to take those difficult decisions and fix this economy once and for all.
Finally, on this part of the discussion, yes, as much as I agree with you that yes, we need to take some bold steps, how well would you say government is also ready to cushion the effect? I see issues around trust deficit here, when Nigerians are scared of saying, okay, if we pay the price, are we going to get the results at the end of the day? That is where I think a lot of education and enlightenment of Nigerians to understand what this really means. Would you say government has done enough? What more can be done for Nigerians to be able to take all of this hook, line, and sinker and believe that forward-looking, moving on, the positives of this will outshine the negatives?
Well, the government has to do a lot of awareness creation, a lot of public awareness creation. Just the kind of awareness that is being created on COVID vaccination. Government needs to do that, need to bring it down to every household on the cost and benefits of taking out the subsidy on petroleum products. People need to appreciate the cost because that's the concern they have. They are cost, no doubt they are cost. And stated with that today we'll be buying, maybe we would have been buying fuel at 212 naira. So there are clear costs that will burden families and households. But there are also long-term benefits. So we don't have the highways, we don't have standard gauge rails. We're pouring every kobo that we're putting into standard gauge rail. We have a huge budget deficit every year in, year out. And then we are spending the money we should have spent on infrastructure, on consumption you cannot place your hands on. So the key thing for government is, look, come out boldly, declare your intent, let the people know you mean well, convince them on the pros and cons of the current arrangement, and let them also see the entire benefit of the new arrangement and make commitments and define timelines. If you cast your mind back to the start of GSM operation in business in Nigeria, how much was a SIM card then, Tolu? Today, you can visually get SIM card for free. A phone line was more than 100,000 at the time they started. Where is it today? Because it was now subject to market forces. Prior to that, it took me more than 100,000 naira to get a landline where I was living in Bagada phase 1 then. Today, you don't need to go to anybody to get a line. These are the benefits of free market enterprise once you have appropriate regulation. The challenge we have is that the government is not even communicating. Government is not creating the necessary awareness. Like you said, there's a trust deficit that people are saying, look, even if we agree that the government should take out the subsidy, are we sure we're going to get the benefits? Well, it's a chicken and egg thing. It's either which comes first. You have to build a trust, or you allow the government to build a trust from these resources. And I think as it stands today, we really don't have time as a country. We are running a huge budget deficit. We are currently spending close to 90% of our earnings, if you look at the last quarter of 2020, in terms of federal government revenue and debt service. We are spending close to 90% of debt service. Of course, that could be an aberration because of the time. But if you look at over a period of 1 year, you realize we are spending more than 50% of our revenue on debt service. And it's going to keep building because we have to keep borrowing. You're going to get to a point where government will not have one kobo to even meet recurrent expenditure. As it stands today, we're not spending one kobo on capital expenditure from government revenue. Every kobo we spend on capital expenditure is borrowed. Well, how long are we going to continue that way? I think it's something we need to draw a line and say, look, let's take the pay for the next 3 years and then build the appropriate economic structure.
Well said. It's a discussion that will continue. We'll keep a tab on this issue and we'll continue to let Nigerians understand what this means, what it stands for. Mr. Johnson, finally, the demutualization process at the stock exchange has been concluded, signed and sealed. How does this come to you before we start to see how it will affect trading? Because many are saying this will enthrone a new regime at the exchange.
Yes, absolutely. It should bring a lot of benefits to the economy today. In the first place, we should see a lot more interest in the Nigerian capital market. As it stands today, the Nigerian capital market stock exchange is second in Africa, but being second is a distant second from the first in Africa. As at last figure I checked, South Africa had a market capitalization of more than $986 billion, whereas Nigeria had a capitalization of just about $48 billion. So you can see the wide gap between the number 1 and number 2. Whereas in terms of economic size, our economy, our GDP is bigger than South African GDP. We're almost 500 billion, South Africa is just about 300 billion. So this mutualization will ensure that we attract more capital flow into the Nigerian capital market. And because it creates a high level of transparency, it will improve the level of corporate governance, and it will also give the exchange capacity, financial resources to invest further in market development.
Now, but we've seen that one way or the other, this has really not affected or changed the trading pattern that we've seen at the exchange for some time. Even as of today, the market is closing the week negative, down 0.13%.
You know, a couple of factors influence market movement. Most importantly, the major factor we are witnessing today is the inflation market movement is the interplay in the interest rate environment. We are seeing consistently the past 8 weeks or thereabout, we've seen a sharp increase in interest rate. The last auction that was done on 10th and settled on 11th, which was yesterday, Treasury-based auction. The Treasury-based stop rate moved from 5.5% for 364-day instruments to 6.5%, 100 basis points increase. And prior to that, we had moved from just 4% to 5.5%. And preceding that movement, we had a movement from 2% to 4%. So this sharp jump in interest rates is making investors pull back from the equities market to now reconsider going back to the fixed income space. And as long as you have that interplay, because we all know that if interest rates go up, investors will underweight their portfolios in equities and overweight them in fixed income. So what we are seeing is a shift in investment preference from equity instruments to fixed income instrument. It is not because there is nothing the demutualization will have impact it will have on it. As long as you have a compelling need for people to rebalance their portfolios and move to fixed income instruments instead of variable income instruments. So you shouldn't expect any change in market trend just because we are demutualizing. Demutualization will bring a long-term benefit to the market.
Some have talked about policy issues, that this brings an issue of talking about movement from the equities market to the fixed income space. Some are saying that the central bank and SEC and all of that, there are some policies that really need to be looked into. Now, with this kind of move, what does it speak to you with regards to confidence in our market? When do we expect that to really come back so that we can even, yes, we want local players to also be active, but with all of this side by side, how does it come to you?
You know, what I would say, if you look at what happened in the market last year, where the market gained up to 50%, one would say that there is a reasonable restoration of confidence in the market. We also saw, to a large extent, the return of retail investors in the market. And retail investors are the barometer which you measure market confidence. So once you see active participation of retail investors, you know that confidence has been restored in the market, because retail investors are the ones who are not, who move according to the trend, and they go to the market when they think that the market boasts good opportunities. And as it relates to the interplay of interest rates or the impact of interest rates in the market, we have obtains everywhere in the world, in virtually all markets, because as investors are looking for yield, and they will move their assets into instruments that have higher yield. Remember that equity instruments are what we call variable income assets, in the sense that you can't really determine with certainty what the prices will be, whether you're going to gain money or lose money. You are not going to determine at the beginning of the year whether the company is going to pay dividend or not, or whether the company will even do well operation-wise or not. So people go to variable income assets where the return on fixed income assets is not high. If you have a return on instruments that are certain, which is what the fixed income instruments give you, you are certain of what your yield will be. So if you are getting a 10% yield and you have a probability that you get 12% from a variable income asset, the tendency is the err on the side of caution if you're a risk-averse person, to say, let me rather go for a 10% instrument that is certain than to wait for a possible 12-15% instrument. So that interplay must always be there, which is why in portfolio construction, you have to balance your portfolio. You have to hold some variable income assets that have the potential of giving you exceptionally high return, and you have the fixed income instrument that gives you some level of stability and defined return.
Let's project for the coming week. What do you expect in totality playing out at the exchange?
I think the market will continue to record some zigzag movement. You could see some market gains, which correct downwards with market losses, because what is happening today is that there are a lot of speculation in the market. Investors who are speculating are waiting for marginal gains in their equity prices, and they lock in that profit and go out. So that's why you are seeing that kind of movement. Sometimes you see 1 or 2 days gain and you see 3 days losses. And like I also said, the interest rate environment will be a major determinant of the direction of the market in the immediate short term. Because as it stands today, all indications point to the fact that the monetary authorities intend to continue to increase interest rates, to some extent attract foreign portfolio investment in fixed income instruments, stabilize the exchange rate, as well as reduce the pressure on inflation. So these factors will continue to impact on the price movement of equities.
It's always nice having you on the show. Thank you very much for your time, Mr. Johnson Chukwu, CEO, Carrier Assets Management Limited. Enjoy your weekend.
My pleasure.